Yeah, well, friends, welcome. Let us start our today's class. So, as we have planned, or we are planning just now, very quickly we will be recapitulating what we have learned in our introductory class. So, I was informing you this thing. Uh, yeah, so we'll be. I was showing you this thing, the income tax department's website. At that point of time, I told you that please visit to the income tax department website, which is www.incometaxindia.gov.in. There are many things you can learn. You can find in some places acts and rule. Entire income tax act is here. Income tax rules are here. Notification circulars are here. So you can find out all these things here. Tax tools are also there. Previous class I had shown you demo how to use the tax tools, how you can use tax calculator. So there are certain useful things. There are many other things are also there in this site. So please visit to this website and make yourself familiar with income tax department's website. Okay, that is one thing. And in that site also, I was showing you this is how you can refer to the income tax act. If you click there, acts and rules, you can find income tax act. If you click here, you can find out section wise a particular section you can search. Okay, and I was showing you in the previous class section 1. In the previous class, we have covered section 1. Is it done?
Yes, sir.
Yeah. And we have seen section 1. There are 3 subsections as you can see, right? And section 1 covers subtitle, extent, and commencement. And entire income tax is divided into several chapters. Chapters are divided into sections into subsections, then clauses, subclauses. Okay, items, provisos like this. The act is classified. So as you read the section 1, subsection 1, this act may be called as Income Tax Act 1961. It extends to whole of India. First is title, then it extends to whole of India. Third thing, it tells us it shall come into force on first day of April 1962. So it talks about commencement. So section 1 of Income Tax Act talks about short title, extent, and commencement. Right? Understood? Yes or no?
Yes, sir.
Yeah. So this is we are in the preliminary chapter. Section 1 is over. Very simple section, right? So you also try directly see this act, see the law, or visit to the income tax department's website and try to find out where it is written. Okay, chapter, this section 1 is over. Now we may visit to section 2. Section 2 talks about definition. We need to understand various terms which are provided in the income tax law. For example, you see advanced tax. What is advanced tax? We need to understand. What is agricultural income? We need to understand. So there are various terms which are defined in section 2. Okay. So if you need to, when we feel that there is a need to understand the meaning of this term, then we can check it whether it is defined under section 2 or not. If section 2 has defined it, then so far as income tax law is concerned, that is the meaning. If it is not defined in the section 2, then different interpretations may come. You may refer to a dictionary. But if it is defined, then that is final. So far as tax law is concerned. Okay, understood? This is the use of section 2. And previous class also I had shown you various tax tools which are available in the income tax department website. You see tax calculators are there, deferred tax calculators are there, medical facilities, so many calculators are there. So I was insisting that please visit to the department's website and make yourself familiar with this calculator so that if some small, let us say, problem is there, small case is there, you can use this calculator and arrive at this answer. So this is how calculator can be tried. You can select the assessment year, you can select what is the net taxable income. Automatically tax, surcharge, health and education says total tax liability will be computed. Okay, previous class I had shown you. You can try it how to use the tax calculator. Various examples I had shown you. Okay, after that I had told you about the scheme of taxation. Have you remembered this scheme of taxation? Some of you might be new, so I was insisting that please write this sentence. You may write it later on. I'll ensure that this video is uploaded in some social media site so that you can refer to this video later on also. So this is what we call it to call a scheme of taxation. I can explain it like this. Every person whose total income of the previous year exceeds the maximum amount which is not chargeable to income tax is an assessee and chargeable to income tax at the rate or rates prescribed in the Finance Act for the relevant assessment. This is the sentence you are noted down in our previous class. Yes or no?
Yes, sir.
Yeah.
Yes,
Yes,
sir.
sir.
And at that time also you had underlined these words like person, total income, previous year, maximum amount, assessee, chargeable, rate or rates, Finance Act, assessment year. These are the terms which you have underlined. Is it done? If you are carrying your previous class note, you can find out. These are the notes. These are the points which you have already underlined. Okay. Why you have underlined this thing? Because without understanding this, without understanding the meaning of these terms, it will not be possible to understand the scheme of taxes. Okay. So this particular sentence says that every person, I need to understand what is the meaning of person first. So if I want to understand what is the meaning of person, where can I find that thing? Where person will be available, person's definitions will be available.
Section
Section
2.
2.
Section 2, I have to refer to section. Okay. So first we'll be understanding the meaning of all these terms. Every person whose total income of the previous year. So I need to understand how total income needs to be computed. What is the meaning of this previous year? And I need to know that only when the total income will exceed a maximum amount, so law prescribes some maximum amount. That means up to that, if you earn, there is no tax. So only when it exceeds that, there will be tax. There will be tax on your total income. So if it exceeds the maximum amount which is not chargeable to tax, we'll be calling that person as an assessee. Okay. And he will be chargeable to income tax at the rate or rates, and these rate or rates are prescribed in Finance Act. Okay. Where it is prescribed? In Finance Act generally. There are some special rates which are prescribed in the Income Tax Act also, right? Let us say tax on long-term capital gain. Okay, tax on lotteries, like this. There are few rates which are prescribed in the Income Tax Act, but normal slab rate that we are talking about, that is prescribed in which act? Finance Act. And we have to refer to the Finance Act for the relevant assessment year. We'll be understanding what is the meaning of assessment year. And we have to refer to the Finance Act for the relevant assessment year. Okay. Right. Yeah.
Yes, sir.
Yes,
Yeah.
sir.
And few other things also we need to understand at this point of time. So what is most important here is the total income. We need to know how to compute total income. And one thing has to be kept in mind that total income shall be determined on the basis of residential status. So therefore, it is important to understand what is your residential status or what is the residential status of an assessee. Okay, subsequently we'll be learning assessee may be resident, maybe non-resident. Some cases he may be resident but not ordinarily resident, like this. So our total income computation depends on his residential status. Okay. When you will be using tax calculator, which is also provided in the income tax department website, you will also find there also one point is there, and the calculator is also asking you what is the residential status. Because on that basis, income shall be computed. Total income can be different depending upon the residential status. Okay. Right. And
Yes, sir.
as I told you, the normal tax rate, the slab rates are prescribed in the Finance Act, but in certain cases, some tax rates are also provided in the Income Tax Act. And as you know, if tax is payable, that person will be called as an assessee, but the exact definition of assessee is provided in section 2, clause 7. Okay, so at the appropriate point of time, we'll be understanding what is the meaning of assessee by referring to this section. Right. Now, first we'll be understanding what is the meaning of persons. As you know, if I need to understand what is the meaning of person, I have to refer to section 2, clause 31. There, person has been defined, right? Our first sentence we have written every person. So first we'll be understanding what is the meaning of person. Then we'll understand what is total income. Then previous year, like this, we'll proceed. So as you can see, the definition, it is an inclusive definition. I have already informed you before that definitions can be inclusive, can be exhaustive, can be inclusive, come exhaustive, like this. Is it not? Have you remembered? Various kinds of definitions.
Yes, sir.
If the definition says that this means that, there is an exhaustive definition. But as you can see here, defined definition is person includes. That means this is only an inclusive definition. Meaning apart from these 7 items which are listed here, there might be many more other category of persons may be there, because this is only an inclusive definition. Nowhere it has been said that person means an individual, HUA, farm, AOPBOI, etc. It has only said that person includes individual, HUA, farm, and farm includes limited liability partnership farms, association of persons or body of individuals, company, local authority, and artificial juridical person. Okay, these are the, you can say, these are the various items which are included in the definition of person. Okay, and tax is charged to every person. Okay, person is important. First of all, one has to fall under the definition of the person. Then only tax can be levied on him. Right?
Yes, sir.
Yes, sir.
Okay, okay, friends. Now, and you know, individual, who is an individual? Individual has not been defined under income tax law, right? But we have to consider the natural meaning or the normal meaning. Normal meaning means natural persons, human beings like you and me. All of us are person. All of us are individuals. Okay, even minor children and persons of unsound mind, all of them will constitute individual, and they are chargeable to income tax if the total income exceeds the basic exemption limit. That means if the total income exceeds the maximum amount which is not chargeable to tax, that person will be liable to pay tax. Okay, and in case an individual dies, his legal representative will be uh, responsible for, let us say, uh, for all these income tax obligations. It is the legal representative who will be held responsible. And in case that person is a minor or is a person of unsound mind, then who will be responsible? It is the responsibility of the guardian to comply with income tax provisions. Okay. Similarly, Hindu undivided family, that has also not been defined. Okay. So we have to understand it by taking references from Hindu law. So a Hindu undivided family consists of all persons which are linearly descendant from a common ancestor. It includes their wives, unmarried daughters, and also a stranger is included when he is legally adopted. So this is how an HUF is constituted. And HUF is a separate person under income tax law. Okay. And some of you might be knowing there are 2 kinds of HUF, or you can say 2 schools of Hindu law. Accordingly to different kinds of HUFs are formed. One is referred to as the Ayabaga school, another one is Mitakshara school. In the states of Assam and West Bengal, the Ayabaga you can find many HUFs which belong to the Ayabaga school. And the rest of India, the Mitakshara school type of HUFs are normally found. Okay. So there is one more point of difference between these 2 schools of Hindu undivided family. Under Dayavaga school, what happens? Nobody, that is no member, acquires the right in the share of property by birth, as long as the head of family is living. Okay, so right on the property is with the head of the family. So long as head of the family is living, so nobody has a right to share the property. Whereas in case of Mitakshara law, the Mitakshara school of HUF, what happens? One acquires the right to the family property by his birth, irrespective of the fact that his elders are living. Okay, so that is the difference. But we need not go deep into this subject. What is the Hamanga school? What is Mitakshara school? Just I gave you some brief idea. Both the kinds of HUF are a kind of person. Farm is also a kind of person. Okay, farm is defined as defined under Partnership Act 1932, and the LLP concept as defined under LLP Act 2008. Under income tax law, partnership firm includes limited liability partnership firm. Many of you might be knowing what is LLP. LLP is a kind of firm. Now, in case of partnership firm, what happens? The liability of the partners to the firm are unlimited. Whereas in case of limited liability partnership, the liability of the partners for the firm is limited. Okay, and LLPs, they gets registered in Ministry of Corporate Affairs. So LLP, you say, is an incorporated body. Okay, so far as Income Tax Act is concerned, farm and LLP, they belong to one category of person. Okay, LLP has a separate legal entity, perpetual succession, and limited liability. It's a combination of farm and a company. Income tax rate or income tax provisions are to LLP are similar to partnership firm. Okay, income is taxed in the hands of farm, not in the hands of the partners. In case of LLP, farm has got separate income. Okay, did you understand up to this? What, who is individual, who is HUF, and which LLP, which farm? Is it clear to you up to this?
Yes, sir.
Okay, friend.
Yes, sir.
Now, next category of persons will be learning, that is AOP and BOI. AOP stands for, can you tell me who is AOP? What is AOP and what is BOI?
Association of persons.
And BOI?
Body of
Body of
individual.
individuals.
So as you can see, BOI stands for body of individuals. That means all the members of this body are definitely what? Individuals or not?
Yes, sir.
Individuals only. Whereas in AOP, there is a possibility that all the members need not be individual. One member might be individual, another member might be company, another member might be farm. Let us say one individual, one farm, one company makes a joint venture. We'll be calling it as association of persons. But let's say three individuals make a joint venture. Then we'll be referring to it as body of individuals. Did you understand the basic difference?
Yes, sir.
Yeah, that is the difference between AOP and BOI. But from tax point of view, both of them are one category of person. Okay. And other technical differences are there. Normally, when we talk about AOP, a group of persons joined together for a common object. Okay, their objective is one or intention is one. With one common purpose, they join together. Whereas in BOI, that common object may not be necessary. Okay, maybe they are involved in one particular activity, but still they are together. Okay, we'll be referring to that organization. Only one activity they are involved as body of individual. For example, I normally give this example. Let us say you and I right now sitting together in one group, right? Classes are conducted, but your objective is not same as mine. Your objective might be to learn the subject and my objective is to teach the subject. Whether our objectives are common?
No,
No.
sir.
No. So now, ideally, this should be grouped as a body of individual. Okay. And in case of AOP, any person can be the member, whereas BOI, only individuals can be the member. And the common object thing I told you, one more difference, that AOP is a voluntary association. Since there is a common object, so many people come together, join hands and form an AOP. Whereas in a BOI, it may not be voluntary. Okay, maybe some external agency may be referring a particular group of people as BOI. Let us say court has decided that Mr. X and Mr. Y will jointly pay compensation, or Mr. X and Mr. Y are jointly liable to pay tax. They don't have any association, but an outside agency, let's say court is deciding, court is combining them, right? So even if voluntarily they are not liable, but now an outside agency has formed a body, that is body of individual. Did you understand the difference? So BOI may not be voluntary, and whereas AOP is voluntary. Did you understand the difference?
Yes, sir.
Yes, sir.
Thank you. Now, next we'll be learning about the definition of company, right? So since all of you, this definition of company is very close to your professional course, right? So many times when I ask, please define company, many of you might be knowing. Can anyone tell me what is the definition of company? Can anyone tell me?
Company. Any company registered under this act or any previous companies act.
Okay, so you are speaking this definition. Company means a company incorporated under this act or under any previous company law, right? So this is the basic definition. All of us know it, right? Where it is defined? Where it has been defined?
Companies Act 2013, Section 220.
You see, most of the acts you can find section 2 is definition only. Income Tax Act also section 2, and in Companies Act 2013, which section? Definition.
Two.
Section 2. So most of the act you can find section 2 uh, defines various terms. So all of you are familiar with this meaning? Company means what? Yes or no?
Yes, sir.
Okay, so we are very familiar. But if you write this same definition under tax law, what will happen? You may get 0.
Yes, sir.
Okay, because income tax law has defined company in a different way. Here, company is defined under section 2, clause 17. Right now, if you see what it says, company to mean, that means it is an exhaustive definition, is it not? Unlike person's definition, where it says person includes, but where it is what is said here, company means, can you read? Some of you,
Indian company.
Indian company, then
Body
body corporate
corporate.
incorporated by or under any law outside India. Then third point is institution, association or body assessed as company on or before 1/4/1970. What is the fourth point again? Institution, association or body declared by Central Board of Direct Taxes as company. So company means these 4 kinds of companies. Okay, are you getting?
Yes, sir.
Okay, but here we have to understand what is the meaning of Indian company. Then only you will be able to understand, and what is the meaning of body corporate. But right, okay, but this thing you have to remember that under income tax law, the definition of company is different from the definition which is provided in Companies Act 2013. Okay, right?
Okay, sir.
Okay, please remember this thing. Now, to understand definition of Indian company, first of all, we have to refer to section 2, clause 26. Right? Now, as you can see, you see this is an inclusive definition, or you can say inclusive cum exhaustive definition. Indian company means a company formed and registered under Companies Act 2013 and includes. So means and includes. So this is an exhaustive cum inclusive definition. So it includes a company which is formed and registered under Companies Act 2013 and includes one, a company formed and registered under any law relating to the companies formally in force in any part of the India. This is one provision. A corporation which is established under central, state or provincial law. An institution, association or body which is declared by board to be the company, right? In case of state of Jammu and Kashmir, the company formed and registered under any law for the timing in force in that state. That means earlier, if this some law was there to form company. Okay, and in some other areas like some union territories, etc. So company which are registered under the law, which was for the timing in force. Uh, so if company is formed under that law, all of them will constitute as Indian company. Okay, this is the definition of Indian company. And once a company is an Indian company, then section 217 says Indian companies are company. Okay. Okay.
Yes, sir.
There might be further classifications also, domestic company, foreign company, etc. We'll be covering that thing later on, maybe some other point of time. But broadly, we have understood what is a company, and company is a person. Okay. Next category of person is local authority. Totally, how many category of persons we have seen in that list? Person includes how many category? Who can tell me?
Seven.
Seven. Okay,
Seven.
seven category of persons. Okay, once we cover again, you have to tell me what are the, you have to give the names of all these category of persons. So now next category of person is local authority. Local authority means it may be a municipal committee, it may be a district board, or maybe body of port commissioners, panchayat, cantonment board. These are the examples of local authorities, right? So local authorities also constitute person. Then the last category of person is AJP. AJP means artificial juridical person. Okay. So these are the category of person who behave like natural person, but actually they are not natural person. You cannot sue them. Right? Some of you might have seen that movie. Oh my God, many of you might have seen OMG. Is it not?
Yes, sir.
Yes, sir.
Okay. So God is treated like a person. So here also deities, idols, etc. are treated as person. Let us say Lord Jagannath is also a person. Lord Tirupati is also a person. Okay. So AJP, all of them belong to AJP category. Persons other than natural person, which has a separate entity in the eyes of law, but may not be directly sued in court of law. They are referred to as AJP. Right? With this, 7 category of persons are over. Can you name them, all the 7 category of person right now? Please make some attempt. I want the list of 7 category person.
So
Individual,
Good.
HUF firm,
Individual, HUF,
Individual
farm,
HUF,
association of
L-
persons,
association of
AOP,
person,
BOI,
AOP, BOI, 4, then
company,
company 5,
local authority,
local authority,
6,
AJP.
art,
AJP
art.
7. Okay, okay, very good. 7 category of persons you have understood. Okay, now we'll go back to our previous sentence or initial sentence of what we have written at that point of time. Can you recall? Every person, then what you have written? Every person, then
total income.
Total
whose
income.
whose total income. Now, person's definition is clear. All of you, I think, you have understood what is the meaning of person.
Yes, sir.
Okay.
Yes, sir.
Yeah, you know, person. Now, next, we are going to learn the meaning of total income. Okay. Now, friends, try to understand. Under income tax law, there are 5 heads of income. And there, okay, how many heads?
5.
5
5.
heads.
That means
Yes.
income is divided into 5 heads. They're referred to as heads of income. Now you see the 5 heads of income are listed here. Can you read them out?
Salary, income from home property, profit and gains of business of, or profession, capital gains, income from other source.
So as you can say, these are the 5 heads. Salaries is one head. Income from house property is another head. Profit and gains of business or profession is our 3rd head of income. Capital gains, 4th. Income from other sources, 5th. So these are the 5 heads, right? So one person might be having some income from salary, some income from house property, some income from profit and gains of business or profession, some income from capital gain, and some income from other sources. Okay, different a person having may have multiple incomes. Is it not? Is it possible or not?
Yes, sir.
Yeah.
Yes, sir.
Okay. Now, if I add all these incomes, that means your salary income, house property income, business income, capital gain income, and income from other sources, then what I will be getting if I add all these incomes?
Gross total income.
Gross total income. Right? Yes or
Yes,
no?
sir. Yes, sir.
Okay. But wrong. Okay. All if I add all these total, I will not be getting gross total income. So I have to understand how to calculate gross total income. After this, I have to make two adjustments. How many adjustments?
Something needs to
Two
excludes.
adjustments. After those adjustments, only I'll be able to get what is gross. I'll be able to find out what is gross total income. These adjustments are
Agriculture.
no. Agricultural
Chapter
income
6, sir.
concept is not here. We have to apply clubbing provisions. Some of you might be knowing what is clubbing provision. What happens in certain situations? Some other person's income also gets clubbed with assess's income. That means exactly that is not assess's income. That income belongs to some other person, but that is clubbed. Example, in some situations, clubbing is a separate chapter, you'll be learning it later on. In certain situations, minor child's income gets clubbed. In certain situations, spouse income also gets clubbed. Not always. In certain specific situations, you have to remember. Okay, so if clubbing provisions are to be applied, then after after aggregating all this income, I have to apply clubbing provisions. That income also has to be added. Okay, this is one adjustment. What is the other adjustment? Setup of carry forwarded losses. If in earlier years there has been some loss and return has been filed for that loss and consequently return has been carried forward. Are you getting the meaning of carried forward? Last year there is a loss, but current year there is a profit. That loss can be carried forward and can be set up against current year's profit. Okay.
Okay, sir.
Okay. If that is there, then that loss has to be set up here. So so these are the two adjustments. First, I will find out all this, aggregate up all this income. Then if clubbing provision is to be applied, I will apply that thing. If it's not applied, fine. If carried forwarded losses are also there, I will set up that. After that only, I'll be getting what?
Gross total income.
Gross total income. Okay, now I think you are clear on the definition of gross total income. Gross total income means all the 5 heads, aggregate of the incomes of all the 5 heads plus two adjustments. One is clubbing provision, second is setup of carry forwarded losses.
Sir, clubbing provision is to be deducted,
Added.
added.
Yeah, income is to be clubbed means what? It is added, merged.
Sir, it is other person's income, then how it will,
Yeah.
why it will be added?
It will be in certain situations, it will be added. That's what I told you. In certain situations only it will be added, not in all the situations. Okay, let us say
Okay.
minor child has earned some income, not using his own talent, one skill, one level. That income will be added with either of the parents' income, which income is higher. That is the law. In appropriate time, we'll be learning. Okay, let us say you think of something. Let us say parents are depositing making a fixed deposit in the name of a minor child, and interest is accruing. Are you getting?
Yes, sir.
That interest minor child has not earned out by using his skill or level or knowledge.
Yes, sir.
Okay, so that income will be clubbed with the father's income or mother's income, whose income is higher. So now you've understood, it will be clubbed or it will be added or deducted.
In certain cases, it will be added or it will be.
No, it will be added. All the cases, in certain cases, it will be added, as you are saying. In some specific situation, it will be added. Okay.
Yes, sir.
Similarly, if some asset is transferred or some income is transferred to spouse without transferring the asset is not transferred, but income is transferred. Meaning, house is not transferred, but rent is transferred. Let us say husband has not transferred the house, but he has transferred the rent. In that case, the rent will be clubbed with the transferor's income. So these are few examples. Of course, separately you'll be learning that chapter if it will be there in your syllabus. So in like this, in some situations, some other person's income will be clubbed with SSC's income. So that clubbing provision has to be applied. And then setup of carry forwarded losses. If some losses has already been or is carried forward, that has to be set up. After that only I'll be getting gross total income. Okay. Okay.
Yes, sir.
So
But
setup means we need to deduct the amount
yeah,
from
setup
the.
means we need to deduct. Clubbing means we need to add, and setup means we need to deduct. Okay.
Yes.
Okay. But you see, now we know how to compute gross total income. Yes or no?
Yes, sir.
But we are not, but we are actually more interested not in gross total income. We are interested in total income. If you recall the first sentence, what you have written, every person, then
Whose total income?
whose total income, not gross total income. Gross total income is not liable for tax. What is liable to tax is total income. Now, from gross total income, I have to find out what is total income. Is it clear?
Yes, sir.
How to find out total income? Gross total income minus chapter 6A deductions. I'll be getting total income. So chapter 6A deduction, there is a long list of chapter 6A deduction. Section 80C to 80U covers all this deduction. For example, let us say you are paying life insurance premium, you are purchasing, let us say, national savings certificate, or you are spending money on your child's education, or you are repaying your capital portion of the housing loan. All this, if you are doing something like this, then you are eligible to get some deduction, or you are paying your health insurance premium. So those deductions amount will be deducted. After that, you will be getting total income. Are you getting? And this total income will be rounded up to rupees. It will be up, rounded up to rupees 10, nearest rupees 10, and it will be an upward rounding up. Okay. That means suppose it is 547, it will be 550, or 542, it will be 540. But if it is 545, it will be 550. That is called as upward rounding up. Okay,
Yes, sir.
understood? So
Yes, sir.
5 and above will be converted to next higher number, which is divisible divisible by 10. Okay, so this is the definition of total income. Okay, and we are interested to know total income. So gross total income minus chapter 6 deduction. Is it clear?
Yes, sir.
Okay. Now, have you remembered the 5 heads of income? What are the 5 heads
Yes,
of
sir.
income? Yeah,
Yes, sir.
Tell me.
Salary,
Salary,
Okay,
income from house property,
good.
profits and gains from business and or profession,
Okay,
and
good.
capital gains,
Right.
income from other sources.
Thank you. Very good. Very good. These are the 5 heads of income. Right. So after that, combining these all the 5 heads income, they're making 2 adjustments. So we'll be getting gross total income, and their list of deductions are there. These are some examples of some deduction. As I had told you already, life insurance, premium, provident fund, etc. There are certain deductions also allowed in respect of certain incomes, certain royalty income, etc. are eligible some deduction. Like this, some specific deductions are there. You will be learning it when you will be learning deduction chapter. After that only you will be getting total income, and that total income is liable to tax. Okay, now this is, you see, pictorially you can see the entire thing, how to compute total income. Just have a look. Total income depends on residential status. Then classify income under the 5 heads, combine them, then apply clubbing provisions, then apply setup of carry forward losses provisions, compute GTI, gross total income, then deductions. After that, you'll be getting total income. Okay. Okay.
Yes, sir.
Yes, sir.
Yes, sir.
Okay, fine. Okay. Now, again, we'll go back to our first sentence. What is that? Every person whose total income, then what?
Of the previous year.
No, of the previous year. Okay, yeah. Every person whose total income of the previous year. Yeah. What is previous year? I'll be coming back. Maybe after some time we'll be learning that. Of the previous year, then what? Of the total income
Ex-
previous.
Exceeds the maximum amount which is not chargeable the income tax to income
Yeah.
tax.
Yeah. First we'll learn that thing. What is the maximum amount which is not chargeable to tax? So we learn that thing. Friends, we are learning the provisions for assessment year 2021. Okay. Assessment year 2021 provisions are here. And incidentally, for the assessment year 21-22 also, these limits are same. So this is the limit up to which tax is not chargeable. For individual, HUF, AOP, BOI, AJP, what is the maximum amount which is not chargeable to tax?
2,50,000.
2,50,000.
And for individuals who are senior citizen, whose age is equal to or above 60 years, but less than 80 years, the
3
maximum amount which
lakhs.
is not chargeable to tax is 3 lakh. And for super senior citizen whose age is equal to 80 years or more than that, the maximum exemption limit is, or maximum uh, amount which is not chargeable to tax is how much?
5 lakh.
5 lakh. So all these three things are for individuals. 2,50,000 normal, senior citizens 3 lakh, and super senior citizens 5 lakh. Okay.
Yes, sir.
And for all other assessee, there is no limit, or there is no maximum limit which is not chargeable to tax. Meaning, if a company earns rupees 1, he has to pay tax on it. There is no basic exemption limit. Or
Sir, other SSC includes?
other assessee includes, you see, 7 categories of assessee I had told you.
Yes, sir.
Here you how many category? 1, 2, 3, 4. AOP, BOI is 1 category. So now how many assessees are left out?
Sir,
Company
3.
and local authority.
Out of 7,
Okay.
4 is gone.
Okay, sir.
Okay. 3 other
Yes,
kinds
sir.
of assessees. Okay. For other assessees, there is no basic exemption limit. Okay. Okay.
Okay, sir. Okay,
Yes,
sir.
sir.
Right. And if the person's income exceeds the basic exemption limit, that person will be called as an assessee. But at that time also, I had told you there are other categories of assessees which are defined under section 2 clause 7. Now you see, this is one more definition which is exhaustive as well as inclusive. As you can see, assessee means a person by whom any tax or any other sum of money is payable and includes. So means and includes. Both the terms are there or not?
Yes, sir.
So this is an exhaustive, exhaustive come inclusive definition.
Inclusive.
So if a person by whom any tax is payable, how any tax will payable? Only when his income exceeds the basic exemption limit. He is definitely an assessee, but other persons are also assessee. But who are they? Any other sum. That means might be he has paid tax, but he has not paid interest. He has not paid in penalty. So tax is paid, but other sum is due. So other sum is payable by him. That person will be still regarded as an assessee. Understood?
Yes, sir.
Yes, sir.
Okay. And in
Yes,
addition
sir.
to that, assessee includes first one, every person in respect of whom any proceeding under this act is taken. That means if any proceeding is taken, meaning if some case is going on, maybe it's assessment has been selected for scrutiny, in some income tax case is going on, then that person is an assessee. Even if nothing is payable, but his assessment proceeding is going on, that person will be treated as an assessee. And a person who is deemed to be an assessee, in certain situation, people will be deemed to be an assessee. That means even if they are not assessee, they will be presumed to be an assessee. Okay, right? For example, in certain situation, legal representatives or agents or trustees or guardians may be treated as deemed assessee. That means original assessee is someone else, but these people are deemed assessee. So assessee includes deemed assessors. Third point is that every person who is deemed to be an assessee in default under the provisions of this act. That means if somebody has committed some default under the act, he is always an assessee, or he will remain an assessee. Let us say he has paid tax, paid penalty, everything, but some compliances he has not done. Let us say you are supposed to file return, he has not filed. You are supposed to deduct tax at source and he has not deducted. So because of this non-compliances, that person is a defaulter. Okay. So if that is the situation, that person will be regarded as an assessee in default and is an assessee. So now we have understood assessee means a person from whom any tax is payable or any penalty interest is payable or against whom any proceeding is going on, or if he is a deemed assessee or he is an assessee in default. Okay, so these are the people who can be called as an assessee. Is it clear to you?
Yes, sir.
Yes, sir.
Yes, sir.
सर एक बार थर्ड पॉइंट दोबारा से
Third point is that the person who is an assessee in default. That means he has defaulted. He has defaulted the provisions of the act. Okay, he might have paid the tax. He has paid tax, but he has not complied some of the provisions of tax law. The example I gave you, suppose he has not filed income tax return. Tax he has paid. Or he is supposed to deduct tax at source. He has not deducted. Okay. Or he has not complied with some of the notices of income tax department. He's a defaulter. So defaulters are also assessees. Did you understand this?
यस सर आ गया समझ
So this is the assessee. Okay. Now friends, we will be learning two more related terms. As you know, the first sentence I was explaining, every person whose total income of the previous year exceeds the maximum amount which is not chargeable to tax is an assessee. Okay, now we have understood all the terms, but only two terms are left. What is the meaning of assessment year? What is the meaning of previous year? Okay, both the things we'll be learning together. As you can see, assessment year is defined in section 2, clause 9. Can you read the definition? Assessment year.
Means a period of
Continue.
means a period of 12 months commencing on the first day of April every year.
Full stop. That's it. Okay. It means exhaustive definition. It means a period of 12 months. That means assessment year is always 12 months. In no situation, assessment year can be more than 12 months, can be less than 12 months. Okay. Assessment year always commences on 1st April. For example, for the current assessment year 2021 commences on 1/4/2020 and it is going on. Next assessment year will be commencing on which date?
1st April 2021.
2021. And that will be called as assessment year
21-22.
21-22. Right. It will be beginning from 21. It will be ended in the calendar year 22. So assessment year 21-22 will be commencing from 1st April 2021. Okay. Assessment year concept is clear.
Yes, sir.
Yes,
Yes,
sir.
sir.
Assessment year and previous years are related. Related in the sense, income which is earned in the previous year is assessed in the assessment year. Income is assessed in the assessment year, but it's earned in the previous year. And previous year has been defined under section 2, clause 34, read with section 3. Okay, you have to read section 2, clause 34 as well as section 3 to understand the meaning of previous year. Now you read the definition. Means
The financial year immediately preceding the assessment year.
the financial year immediately preceding the assessment year. So here, whether it has been said, it is 12 months.
No, sir.
No,
Yes, sir, it is also 12 months.
no, nowhere it is said in 12 months. Previous year can be less than 12 months also. It is a financial year. Okay. And the financial year can be more, can be less. Okay. And here you see, previous year can be less than 12 months also. Suppose a newly set up business. Suppose business is set up in the month of January. So here previous year is January, February, March. But assessment year is full year. After that, from April 1st to 31st March, assessment year is there. But previous year is only 3 months. Okay. Suppose
Yes,
a
sir.
baby is born on 31st March. His previous year is 1 day. But assessment year is 12 months.
Yes, sir.
Okay. But previous year is not more than 12 months. And assessment year is always 12 months. Previous year can be less than 12 months or equal to 12 months, but it cannot be more than 12 months. Assessment year is always 12 months. Did you understand it?
Yes, sir.
Yes, sir.
Okay. And if we talk about assessment year 2021, the previous year is 1920. So income is earned during 1920 and that income will be assessed to tax in the assessment year 2020. Now you see currently return filing is going on. So everybody is filing return for the assessment year 2021.
Yes.
But in that return, they're disclosing or they're declaring the income for the previous year 1920. Okay, this is how income tax return filing happens. Did you understand what is assessment year and what is previous year?
Yes, sir.
Yes, sir.
Yes, sir.
Sir,
Yeah, tell me please.
sir, previous year is written in the section 2, subsection 34, that read with rule 3 means what? Why it is written
Read
like
with
this?
section 3. Okay, why it is read with section 3, it will be clarified to you if I show you exactly why it is relevant for you. Okay, right. So give me a moment for now. For the time being, I will be sharing with you. Okay. So let us say you want to know what is the meaning of which year previous year you are looking for, right?
No, sir.
Or
Sir, sir, you told na it is written in section 2, subsection 34, read with section 3.
yeah, previous year you are talking about, no?
Yes, sir. That
Okay.
read with, why it is written
Why
read
it
with?
is written? I was showing you that. You see, you first see the definition. To definition, where should I go? Which section?
Section 2.
2.
Section 2 I should go. Just give me a moment. One minute time. Yeah. Now, friends, just a minute. Oh, okay. I'm going to share the screen with you. Yes. Are you seeing Income Tax Department's website now
Yes, sir.
on your screen? Okay. Now you see, I'm taking you to this place. What is written here? Of course, fonts are too small. What is written here?
Acts.
Acts. If I click Act, I am getting this Income Tax Act. Okay.
Yes, sir.
And as I told you, under Income Tax Act, if you click here, you will get the Act. There are two options. You can go section wise or chapter wise. Since you are looking for a particular section, I will go to a particular section. I am looking for section 2. Or you see section 2 directly also, you can have a link here. I can click here and go to section 2. Where definition is there. Right. And here you are looking for the definition of what? Previous year. You see it is alphabetically, it is there. And you already know it is provided in section 2 clause 34. So directly I will be going to clause 34. Now, can you read here? What is 34? Can you read?
Previous year means the previous year as defined in section 3.
Okay. Now, can you understand this without reading section 3?
No, sir.
So you have to refer to section 2 clause 34 and you have to read it with section 3. Now you have to go to section 3. Then only you can understand. Now you see what is previous year. What is the definition? Financial year immediately preceding the assessment.
Understood, sir.
Did you understand?
Yes, sir.
So why I was showing you? Because law is like that. Many times you may not get the direct definition, or you might have to refer to some other section to understand the meaning of one section. And that time it is expressed like this, section so and so, read with some other section. Okay.
Yes, sir.
Okay. So like this, the way I was showing you, so you can frequently visit to the Income Tax Department's website. You can learn the subject therefrom. Okay. Now, as I was telling you that normally income which is earned in the previous year is assessed to the succeeding financial year, which is called as the assessment year. Assessment year is always 12 months. That is the normal situation. Is it not? But while that is the normal rule or normal law, there are 5 exceptions to that. When I say 5 exceptions, that means income which is supposed to be assessed in the assessment year, that may be assessed in the previous year itself. Okay, so these are not the normal rule, these are exceptions. How many exceptions I told you?
5.
5 exceptions. Okay, so first one is non-resident shipping business. Okay, in case of non-resident shipping business, suppose a non-resident ship arrives in an Indian port and does some business there and earns some profit, then how it will be assessed? If you say, no, this is previous year only, your income will be assessed in the next year, which is the assessment year, then ship will happily leave. Is it not? So how
Yes, sir.
assessment will be completed? So income is 7.5%. Whatever is the revenue that ship has generated, flat 7.5% without applying anything will be considered as its income, on which tax will be computed. Okay, that is one exception. Second exception is that person leaving India permanently or for a long period. If the person is leaving India or living for a long period or either permanently, then he is supposed to give 7 days notice and his assessment will be completed at the rate in force. Whatever will the rate, income tax rate, at that rate his assessment will be completed in the same year itself. Third exception, association of person, body of individual or artificial juridical person, which are formed for a particular event or purpose which is likely to be dissolved. let us say an association is formed, which is likely to be dissolved after that event, then assessment will be completed in the same year, that means in the year in which income is earned. Fourth exception is that the person who is trying to alienate his asset with a view to avoid tax. A person, let us say, he is generously distributing his asset to various other people, so that next year in the assessment year there will be nothing for recovery of tax. If that kind of situation is there, then and purposefully this person is doing with a view to avoid tax, then assessment will be completed in the year of income itself. Point 5 is about discontinued business, and this is a discretionary power of the assessing officer. All these 4 cases I told you, this is mandatorily assessment has to be completed, but it's a discretionary power, means ITO or income tax officer may decide to assess it in the same year or may decide to postpone it for the assessment year. So point 5 is a discretionary power. So at the discretion of assessing officer, till the date of discontinuance, notice of discontinuance has to be given to the assessing officer within 15 days if business is discontinued. And assessing officer, if he wants, he may complete the assessment in the income year itself, in the previous year itself. Did you understand these 5 exceptions?
Yes, sir.
These are exception to the normal rule. Okay, general rule I told you, but always remember there are 5 exceptions to that. 1, non-resident shipping business. 2, person leaving India permanently or for a long period of time. Third, AOP, BOI, AJP formed for a particular event or purpose which is likely to be dissolved. Point 4, a person who is trying to alienate his asset with a view to avoid tax. And point 5, discontinued business. Okay, these are the 5 exceptions to the normal rule that income earned in the previous year will be assessed in the subsequent year, called as assessment year. Okay. Did you understand up to this? Any query you have? Do you have any query?
No, sir.
Okay, friends. Next concept we are going to learn is about income tax rates. As you know, every person whose total income of the previous year exceeds the maximum amount which is not chargeable to tax is an assessee and will be chargeable to tax at the rate or rates. Okay, rate which is provided in the Finance Act. Now, these rates are prescribed in the Finance Act, and we have to refer to the Finance Act for the relevant assessment year. So let us say for assessment year 2021, I have to refer to the Finance Act 2020. For the next assessment year, I have to refer to the Finance Act 2021, which has not yet come, which will be coming in the month of February. Right, I have to refer to that Finance Act. So Finance Act keeps on changing. Every year we get a new Finance Act. And I have to refer to the Finance Act for the relevant assessment year. Okay? Did you understand?
Yes, sir.
Yes, sir.
Okay, Finance Act, as you know, the act initially it comes in the form of finance bill, then it is debated, then finally it goes to the president for assent. The moment president gives his assent, it is published in the official gazette, that becomes law or act. Okay, so we have to refer to the Finance Act for the relevant assessment year. Okay, and now to have a broad understanding of income tax law, it's not that we have to refer to only Income Tax Act 1961. We have to read all other things also, few other things also. So Income Tax Act 1961 has to be referred to. Income Tax Rule 1962 is also relevant. The Finance Act is also relevant because rates are prescribed in the Finance Act. Apart from that, various circulars, clarifications, notifications which are issued from time to time by department, that are also important. And judicial decision or case laws are also important. So one is expected to have knowledge on all these things if he wants to learn income tax properly. Okay. Now, next concept we are going to learn is about rates and rates. So this thing I plan to teach you in our next session. Right, we have to learn the budget concept of budget in detail. We have to learn which schedules of the budgets are important to us and where you can find the income tax rate, TDS rate, etc. So next class will be starting from that point. Do you have any query up to this? Any doubt you have? Otherwise, we'll close our session.
No, sir.
Okay, thank you. We'll wind up our show right now. So we'll catch up in our next class. We'll continue from this point. Thanks a
Thank
lot.
you, sir.
Thank you very, very much. All the
Thank
best.
you.
Thank you, sir.
Thank you.
Thank you.
sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thanks.